If you had an imaginary toaster that on every 15th and 30th of every month, without fail, paid all your bills, your wants, your needs, and all the expenses in between, would you like that toaster? Obviously, you would, right? Most people would say yes. Now, would you insure that toaster to make sure that if anything wrong happened to that toaster, you are able to replace that toaster and therefore replace that income that you were receiving? Well, again, yes, you would probably do that, right? Well, I'm sorry, and I hate to break it to you, but there's no such thing as an imaginary toaster that pops up money, right? Well, in reality, if you're the main provider of your household and you have a steady income that people are dependent on, you're that toaster for your family. And if it made sense to cover that imaginary toaster and insure it, wouldn't it also make sense to insure your life and the income that you bring in for your family so that if anything ever happened to you, unfortunately, you have something in place that will replace that income? Well, that's exactly what life insurance is. And I'm going to talk about a specific type of life insurance today called term life insurance. You see, just like all insurances, it is for the replacement of something. For example, an insurance that many people are well knowledgeable of is car insurance. Car insurance, you give a payment to every single month, and if something happens to you, that car, you're going to receive equivalent amount to that car, or partial amounts, just obviously depending on what type of contract you have. Well, for life insurance, it's almost the same, right? You're going to receive an income replacement to your income, the income that you bring in, the value that you bring in, because people always say that you can't put a price tag on your life, but unfortunately you can. It is the amount of money that you're bringing in every single month that people are living off of. For example, obviously your bills, the debt that you're paying. This could be a mortgage, car payments, medical bills, school payments, and also to accomplish the goals that you're not going to be able to accomplish any longer, and therefore protecting your legacy, which I'm going to go deeper into. Now, when it comes to this type of life insurance, now that we know a little bit about what it is, I'm going to talk about the details. You see, the insurer, if anything happens to the insurer in that set amount of time, which is 10, 20, or 30 years, that is what the term means. If something ever happens to the insurer during that specific amount of time, the beneficiary, which most of the time is the kid, the children, or the wife, or the husband in any case, is going to receive a death benefit or a coverage of the amount of income that they were bringing in. Now, the way it works is the way it works on how much money you're paying every single month is based on your health and your age. So to give you a good example, I have my own type of term life insurance. I am going to pay up to 25 years. So the amount that I pay, since I am very young and very healthy, I only pay $30 a month for $150,000 in coverage. Now, I'm not going to need a lot of coverage compared to people that have kids and again debt, because the amount of coverage that you need is based on how much money you're bringing in. Now, this also includes college for your kids, debt, bills, and everything in between. And above all, funeral expenses, because dying is not cheap at all. Funerals are from $15,000 to $25,000, and many people are nowhere near ready for those type of expenses, right? When life hits. Well, unfortunately, that's why we see so many GoFundMe's, because of the lack of knowledge that we didn't receive when we went to school to know about these things. Now, when it comes to term life insurance, like I said, you're going to get that specific amount of coverage if you were to pass away in that specific amount of time. Now, why is that so important? Why is it that I said that that's the sole foundation of your financial planning? Because all of your financial goals, which can be buying a house, paying off your debt, saving some income, sending your kids off to college, vacationing, you name it. Anything that you want to do with your money is going to take time, most of the time. To build money, all that's going to take time. And unfortunately, the one thing that we don't have guaranteed in this life is time itself. So, in order to make sure that I reach my financial goals and my family's financial goals as the main provider of the household, I have a term life insurance in place for the meantime that I am building up that wealth. So if anything happens during the time that I am building up that wealth, which is going to take a lot of time, it's going to take a lot of time to retire, it's going to take a lot of time for your kids to grow up. If anything happens during that time, I can still send my kids off to college. They're not going to have to worry about the financial stress of paying off the debt that I left behind, the mortgage, the car payment, the school payment, like I said. And they're also going to have that sound grieving period. You're never going to want your wife or your husband to go to work after you already passed away. It's going to be nearly impossible for them. And then, let alone, and then add on top of that the financial stress. That's what life insurance, and specifically term life insurance, prevents. Now, in my case, like I said, I'm young. You may see me and say, well, you don't need life insurance, but that's wrong. I have my own life insurance because I believe that my mom worked very hard to obviously bring me here. She is an immigrant, and like many of us in El Paso and in our community, we do have a lot of people that came from Juarez and Mexico and crossed over. And I would never let that go to waste if I passed away early, and I'm gonna leave my mom without that financial stress. I'm gonna leave her an income replacement so she can live on her life. And in the meantime, while I do have that in place, I am investing my money and I am planning for retirement, but that's not guaranteed. Now, that's what term life insurance is. It is a specific coverage for a specific amount of time for an income replacement. This is 10, 20 to 30 years, and you pay monthly based on your age and health. The amount of coverage is based on how much income you're going to need replaced. So this counts debt, mortgage, house payment, which is the mortgage, right? The school payments, bills, and everything in between. That's what term life insurance is. That's how it works, and the sole foundation of your finances.